They used to dislike us in the past, but for some reason, everyone is now super bullish of Bitcoin. Yes, I'm talking about asset managers and banks, Wall Street alike. In this video, you'll find out why they suddenly had this mood change, what the motivations are, and why you, as a beginner, need to know the difference between proper Bitcoin and Wall Street Bitcoin. Before we get started, though, we need to establish what an asset manager and these banks actually are and what they do. So, you may have known the situation. If you actually go to your bank, you may have a bigger amount of money in your bank account. Suddenly you get approached by your bank consultant saying, oh, have you thought about investing into a diversified portfolio? If you do this, you most likely either use the internal branch of the bank where they have an investment department, or they work with a third party, a said asset manager. The asset manager does nothing else than actually taking in assets and money from its investors. They then distribute this in a diversity of products, from funds to ETFs to potentially also some day trading if they have an internal trading team. And then the goal is to return a return for you minus the fees and the stuff they generate. At the end of the day, they don't really have to care what happens with that money because they get enough influx due to their position in the market. These used to be the departments where Bitcoin would actually make the most significant change because it makes them obsolete. If everyone holds their own Bitcoin and uses the asset outright, you don't need to trust these third parties anymore. That is the idea behind Bitcoin. However, they've also noticed that there's a keen interest in Bitcoin. So over the years, the mood around Bitcoin suddenly started to change very little by little. But at the end of the day, everything exploded when the spot Bitcoin ETFs launched in the US. And nowadays, one of the larger public holders of Bitcoin, although that has to be said, they hold that on the behalf of their clients, is BlackRock, the largest asset manager in the world. And if you actually compare the BlackRock spot Bitcoin ETFs, the IBIT, to their gold counterpart, the iShares Gold Fund, you would see that the ETF actually had the most successful launch in history and is outbidding their own gold ETF. This sudden change in behavior by investors, because they were also a bit FOMO driven. The price started to increase. People wanted to allocate more to Bitcoin. They did not really want to fuss about the whole self-custody part, so they just sent money to a trusted address, ideally BlackRock in this example, where they know they already work with these things. And all BlackRock does is they take the money in, exchange it for Bitcoin with Coinbase, they're their custodian, and then they issue a share certificate to the investor saying, in this amount you bought Bitcoin, and if they then want to sell at a certain price, they can take a profit out. They do put fiat money in and take fiat money out, and they only use Bitcoin in this example to actually trade its volatility. Now, this is an extremely popular product, as it seems from the last couple of months on Wall Street, because it enables Wall Street to actually have exposure to Bitcoin. Due to regulatory changes, this is not possible. They can't yet hold their own Bitcoin, at least if there's not a big change in regulation in the next coming months. It may look like this, but as of currently, they have to be the custodian of these Bitcoins in a close relationship with the Bitcoin custodian in the background. So does this mean that BlackRock and all of these asset managers suddenly change their interest in Bitcoin? No, it doesn't. They may see the advantages of it, but their perception of what Bitcoin is compared to what it truly is vastly different. They want to hold Bitcoin on behalf of other people. They don't want them to hold them themselves, as they've shown with countless studies and things they've done in the last couple of 6 to 9 months. All they are interested in is that portfolio allocation, which could be liquidated, is actually turned into the ETFs and therefore generating more revenue and especially fees for them. They may see the advantages of Bitcoin outright, but obviously they're always selling their own products first. So if you're a beginner, it's very keen to understand. Proper Bitcoin is what you hold in your wallet, where you have the ownership of the private keys, 12 to 24 words. If you send the money to an asset manager, they may do a fine job. They may help with adoption across Wall Street and institutions. You are actually not using Bitcoin, you're using a Bitcoin vehicle. However, the success of the ETFs and the adoption amongst institutions is all part of game theory, which helps Bitcoin get to mass adoption. There will probably always be a time when you've got these custody and non-custody solutions. But if you're looking for an app that offers you a non-custody solution, look no further than the Relai app. With us, you have the possibility to buy or sell Bitcoin either in a one-time purchase or in an auto-invest plan where you can actually take note of the dollar cost averaging effect and save and accumulate over a long time. And the best of it is you hold everything in your self-custody wallet. If you want to know more about this or download the app, follow the links in the description. And I look forward to seeing you in the next video where we explain what Bitcoin is simply all about.